Question number 17, where partners are sharing profit and loss ratio in the equal proportion. They have given capital and drawing. Hidden adjustment like government security investment 8% have to be removed, and loan of month where the percentage is not given but going to be calculated, and the current account. Now if it is current account, so here we are going to prepare as per the fixed capital method, and here the adjustment, 5 adjustment. Now in the adjustment is something quite interesting. Third one, where they have made a calculation of for the debtors and the bad debt, as well as in the fifth adjustment the missed out sales return book is given. So this two is interrelated because sales return will be get minus with the sales as well as the debtor, that I will show you in the calculation. So now let's start with the calculation. First adjustment is the value of closing stock is 80,000. Its market value is 10% more. Again the more is given, so no need to calculate. If it would given less, then we would calculate it. But यहाँ पर more दिया है तो हम calculate नहीं करेंगे. Just take the 80,000 to the trading account credit side and the asset side. Closing stock with the amount 80,000 and asset side next. Provide depreciation 10% on machinery and building. Now for 10% machinery and building, here we can see the machinery is given plus the purchase of machinery in the beginning of the year, so no need to calculate any date. So these two are the machinery, 1,50,000 and 80,000, which we are going to calculate. So here we'll write down machinery, that is 1,50,000. 40,000 plus which have been purchased in between of the year, purchase of machinery. So here we got the amount 1,90,000 machinery, which has to be calculated with the depreciation. For the depreciation 1,90,000 10%, here we get 19,000. So let's get it minus depreciation on machinery 19,000. Here we get the calculation 1,71,000. Take this 19,000 to your P&L debit side. Depreciation on machinery, that is 19,000. Next is to calculate on building as well. So here we get the amount 2,50,000 for building. First we'll write down on the asset side building with the amount 2,50,000, where we'll make a minus depreciation on building. Let's take a calculation out. 2,50,000. If we remove 10% of 2,50,000, we get 25,000. Get minus 25,000 from the building and take the amount outside 2,25,000. The minus amount of depreciation will be taken to the profit and loss debit side. Depreciation on building, that is 25,000. Next is the third adjustment. As I told you, it is interrelated with the fifth, so that we'll do later. Now we'll do fourth one. 10% interest is outstanding on bank overdraft. Now first we'll find out the bank overdraft amount. Debit side amount, that is the cash balance. The credit side amount, that's your bank overdraft, that is 3,000. First let's take the bank overdraft to the liability side. 3,000. In the adjustment 10% is outstanding. If we remove 10% of 3,000, we get 300. So write down outstanding on bank overdraft 300. One will write over here and one will write in the P&L debit side. I'm writing in the short 300. Now check the last adjustment, that is goods of rupees 2,000 is missed out to record in the sales return book. Now it is missed out in the sales written book. So this 2000 is going to be minus with the sales minus sales written minus unrecorded sales written, that is 2000. That will minus later when we get the amount. And here from the debtor will remove debtors minus unrecorded sales written 2000. Now for this we have to go for the third adjustment, that is debtors of rupees 10,000 become insolvent. So it means that bad debt is 10,000, but 50% of amount will be received as per the instruction. So here we got the instruction that we get the 50% amount but not yet received, okay, of his receiver. So provide, now next is the provide 5% bad debt reserve. So for this calculation, first let's find out debtors. Here the customer and supplier. Customer means your debtor. So debit side 25,000, that's your debtor. So first let's write down. For this we have to take the calculation at the next page. Here I am taking 25,000. First I will minus unrecorded sales written of rupees 2,000. Value remain 23,000. Now out of this 23,000, the actual bad debt is 10,000. And if we remove calculation, 13,000 remain. From the 13,000 in the adjustment, they have given you bad debt reserve have to be calculated 5%. So take the 13,000, remove the 5% of it, you will get 650. And if we get it minus, the value is something else, but here we have to write down the calculation as per the instruction. It is given that 50% is going to be received. So if we remove bad debt as per the adjustment, 50% amount will be received. So 10,000 का 50% होगा 5,000. Here I am putting the calculation. 10,000 का 50% will be the 5,000. So as per the adjustment, here we are going to take bad debt as a 5,000, but in reality it is 10,000. So keep that calculation because we want the correct bad debt reserve. Okay, so 5,000, just take it, remove it here, minus bad debt reserve from the adjustment, it would be 650. Make a calculation, you will get 17,350. Now here the calculation is ready. Take the bad debt adjustment to the profit and loss account, 5,000, and bad debt reserve 650. Now this calculation will take it out later after finishing trial balance. Maybe find out bad debt and bad debt reserve. So here we finish all the adjustment. Now move to the trial balance. First we'll take the debit side, that is the drawing 3,000 and 4,500. Here we prepare the current account. Now when we are moving for the partners related entry, we'll move to these two accounts, right? But here, before we write the drawing account, it's a current account. It can be the opening balance, it can be comes to the debit and the credit. So leave one line and write down 1st April 2016 for drawing, that is 3,000 for Man and 4,500 for Mohan. And for capital, that is 2,80,000, 2,20,000 will directly move to the liability because we already prepared the current account. Amount is 2,80,000 and here 2,20,000. If we add both of them, we get 5 lakh. Next, I'm putting scale so I don't want to get mistake with any of the amount. Purchase is 80,000 and sale is 1,20,000. So take to the trading account. I'm leaving one line because maybe they gave opening balance 80,000 and sales is 1,20,000. Keep it inside only because the calculation may comes. Next, advertisement expense 7,000 will come in the P&L account. Advertisement expense 7,000. 15,000. Next, carriage outward 850 will also come in the P&L account only. Carriage outward. If it would be inward, so come in the trading account, but when it is outward, it comes to your P&L account. It is 850. Next, machinery we already wrote. Purchase of machinery also done. Building also done. Office salary 15,000. That is the expense side of the P&L account. Salary 15,000. Customers and suppliers. So that's a debtor. 25,000 we already took. 35,000 for creditor. Next, goods written 16,000. Now this 16,000 is the sales written and 14,000 is the purchase written. So here I'm writing purchase written over here and 16,000 at the sales side. Let's take the calculation out. Here comes 66,000 and here comes 1,02,000. Next, weight charges will come to the trading account debit side. Weight charges 450. Next, loan of month 10,000. Now loan will come to the liability side. Loan of month 10,000. Now here you have to remember, if the loan is given you have to calculate, but you can see the interest on loan is also given 400. So if we make the calculation of interest on loan of 10,000, because the percentage is not given in the question, so here I took the 6% and date is not given, so no more calculation. Just remove 10,000, 6%, it is 600. So interest on loan will be written first at the P&L debit side. Interest on loan. In the trial balance it is given 400, but in the calculation we find out it is 600. So here we have to add 200. So it means it is your outstanding. We'll move to the same side of the liability. We'll write down over here outstanding interest on loan, that is 200. Just take the 200, the difference of this two amount, just take 200 to the liability. Next, custom duty 1,300 comes to the trading account. Custom duty 1,300. Now those who are getting confused that how I am moving in which account, please refer to the 11th standard specimen which I have given you. Next, goods stock. Now here the date is 1st April. 42,000, that is opening balance. 42,000, write down in the trading account. Opening stock 42,000. Next, trading expense. Remember it's an expense, 1,300 will comes to the P&L debit side. Trading expense 1,300. Next is wages and outstanding wages. Wages 750 will come over here. 750, and outstanding wages comes to the liability side. Outstanding wages amount is 2,600. Next, commission paid in advance, that is prepaid commission, comes to the asset side. Paid commission, that is 350. Next, bank balance and cash account. We wrote the bank overdraft 20,700 cash balance will come to the asset side. Cash balance 20,700. Next, interest on loan we already finished. Investment in 8% government security. The investment word itself, it's your asset 30,000. First write down investment on 8% government security 30,000. Next, the percentage is given and that's the hidden adjustment. So just make a calculation on it. If you remove 30,000, 8%, you will get 2,400. and when we get interest on investment, that is your income, and income comes in your P&L credit side. Write down interest on investment 2,400, and the same side will come over here with the interest on investment government security, that is 2,400. Next, current account opening balance 8,000 on the debit side, 1st April 2016 to balance brought forward at the month 8,000, 1st April 2016 by balance brought forward for Mohan, it is 12,000. So here we finish all the entries of the adjustment and trial balance. Now we'll make a total. Here the total is done of the trading account. Credit side is comparatively more, so going to make it fair, 1,82,000 at both the side, and just get minus with 1,10,500. You will get 71,500 as a gross profit, which will move to your profit and loss credit side. $71,500. If we make the total of this two, we get 73,900, and if we total this column, we get 74,700. So this one is more, so going to write both the sides, 74,700, and if we get minus with 73,900, we get the difference of 800. So our next account is profit and loss appropriate account. We got the difference at the credit side. We'll move to the debit side. As we can see, the credit side is empty. So the 800 is going to be written at the both the side, and 800 is going to be shown as a divisible loss, as we got the difference at the credit side. Is going to distribute between the partners in equal proportion. At the beginning only we saw, so 800 will be distribute in the equal proportion between the partners. Now make a cross over here, 31st March 2017, divisible loss 400. Now if we make the total this side, it is empty. But if we make the total over this side, we get 11,400. So obviously going to write both the sides same amount, and here we'll write down 11,400 as a balance CF, that is closing balance, 31st March 2017. As we got the difference of month at the credit side, so same side will move in the balance sheet by writing current account, write down the name of a partner, and write down the difference what you have find out, 11,400. Now we'll make the total of the another partner, that is Mohan. Here we see it is 12,000, and here we got 4,900. So this one is more, so make it fair, 12,000 both the side, and here we get the difference of 7,100, that is balance CF, 31st March 2017. The closing balance will move, or the current account will move at the same side for the partner Mohan. That is 7,100. Now we'll make the total of balance sheet. Here balance sheet got tally. Just take a last look if you need any calculation or the amount, balance sheet and the calculation.